Hello everyone, welcome back to Comparative Investing Techniques CIT channel. This video is to share with investor on the updates of our portfolio performance, which we have constructed based on actual stocks that we have shared with investor from 31st of August 2020 onwards. As such, we shall now bring investor attention to our spreadsheet update. So for those investors who have been following our Facebook, this is something that is nothing new to you, because as and when we will actually update the performance of our portfolio. The purpose of doing so is actually to use actual cases to demonstrate the effectiveness of a CIT, as well as comparative investing technique is actually a portfolio investment strategy, where our aim is to help investor to construct a portfolio that actually fetch you guaranteed return over the long run. So when you hear the words guarantee, it's not something of a gimmicks, it is something that we are able to do so. This is the reason why we are using actual cases to prove to you. Alright, so for this portfolio that we are constructed on the 31st of March 2020 up to date, we have a total of 18 stocks added to our portfolio. So all these 15 stocks were actually shared with investor along the way, but for these 3 stocks is because we have now actually started to market our intrinsic value. So for certain sensitive information, we do not reveal unless investor actually purchase the intrinsic value, then you get to know what is the value of the stocks. So for these 3 stocks that we have added, we do not reveal the name as well as the link, but in future, as time goes by, when the share price move much higher, then we will actually disclose the name. Alright, so but of course we also do indicate their entry price, so along the way investor will get to see more details for these 3 stocks, or even more stocks to be added to the portfolio along the way is also possible. Alright, so right now, based on the latest update on 10th of September 2021 on these 18 stocks that we have, these are the returns, accumulated returns as compared to their respective entry. So in total of 18 stocks, we have 3 stocks that are in red, that means they are in losses, meaning is Genting Hong Kong, Reference Infrastructure, and one more stocks where we have just bought or is also in red, but we do not disclose the name for the time being. Alright, so out of 18 stocks, we have 15 in profit and 3 are in losses. So when you actually look at the probability, when you have 15 over 18, so that means our profit ratio, that means on the stocks that we actually shared with investor based on these 18 stocks, we actually are able to fetch 83% profit ratio. That means out of 100 stocks, 83% is actually stocks that we share is going to be in profit. Alright, but of course this is based on the 18 stocks. So this is one point that we actually share with investor. Secondly is when here is actually the accumulated portfolio return. So as at 10 September 2021, the portfolio return 31.8%. Also, this is the overall portfolio return, but of course, like what we mentioned, within this portfolio of 18 stocks, there were 3 are in losses, right? And all the stocks we actually buy at the same capital. That means we don't say that, oh, I like this stock, so I actually use more capital to buy. No, every stocks we actually buy at an equal weightage. Alright, so the balance of 15 are all in profit. So of 31.8% is the portfolio return. So because all the stocks are taken from either Singapore or Hong Kong market, so we have to compare with these 2 indexes to show whether is CIT performance is doing well. So when we look at Hang Seng Index, Okay, on the 10th of September 2021, it closed at 26,205 points as compared to the Hang Seng Index on 31st of March 2020 was at 23,603 points. So the accumulated return is 11.02%. Straits Times Index is at 3,098 points on 10 September 2021. 31st March 2020 was at 2,481 points. So the accumulated return was at 24.87%. So we can see that these two for CIT portfolio, we are comfortably outperform both the indexes, right? Even though all the stocks we have taken are from these two markets, right? So secondly, we want to share with investor is that we note that along the way, this is actually from 31st of March all the way until now. So every month we do actually an update, right? So you can see there are many records over here. So when we look at 31.8% return for the portfolio, right? The month that actually have a closer return to what we have currently is actually on the 26th of February 2021, where the portfolio generated a 30.22% return. But of course, thereafter the portfolio return went up due to the market was doing very well. Then right now there was some pullback, right? So this is actually very normal. If you are investing for long term, you don't expect the portfolio every day is going up. There will certainly be a certain point of time there will be some pullback and correction, and thereafter you will march forward again, right? This is always the case. It will happen. But when we are actually what we are trying to share over here is that on the 26th of February, there were only 14 stocks in the portfolio, right? You can see 14 stocks, right? So if you invest 1,000 in every stocks, it's actually you are invested 14,000, right? So when you actually look at 10th of September, we have 18 stocks, all right? 18 stocks. So same thing, if you invest 1,000 on every stocks, you actually invested 18,000. So even though the portfolio return for 26th of February and 10th of September was very close, or 30.22 and 31.8, but the absolute dollar return is different due to the capital invested, right? So when you are actually invested for 14,000, that means 14 stocks, your return at 30.22% in dollar is actually 4230, right? For 18 stocks, the return is actually at 5724. So even though both in terms of percentage, the portfolio return is pretty similar, but in absolute dollar, it is $1,500 more. Alright, so when just now we are talking about CIT is actually a portfolio investment strategy. So what we do here is that along the way we help investor to expand your portfolio. Alright, so that this is basically to help you to snowball your overall capital. So if you have a 14,000 and and that fetch you a 30% return, and your absolute dollar at that point of time is 4,002. But when you actually have a 18,000 capital invested with the same accumulated return, you get 5,007. Alright, so but of course along the way, if this portfolio return also continue to snowball, and together with your capital invested is also increasing, then you will see your portfolio overall return is going to be snowball in a very fantastic way. But of course that will take time. Alright, so here we are, what we are sharing over to investors is that when you invest via a portfolio, you don't have to pick stocks, right? You don't have to monitor stocks. What all you need to do is to buy at a deep discount below their intrinsic value, add them into your portfolio and hold it. Given time, you will easily outperform the stock index as well as to deliver yourself a very attractive return. Right? Thank you for watching this video, and goodbye.